I mean, I agree with Bank of America. I think if we break 121, which was the high at the end of January, it will go very quickly up to probably like 200. So maybe not 300 like Bank of America sees it, but why not 200? And I think in the last few months, since the top in gold and silver, the euphoria and the froth has been taken out of the market. And yeah, people, there's a wall of worry right now. I think there's a lot of worry. A lot of people, yeah, concerned that it's going to go lower. And usually that's a good thing. That's a reverse indicator for the sentiment being low. And I saw the other day as well, uh, Michelle, that I think Bank of America bought a big chunk of a silver mine as well.
Hmm.
I don't know
Yeah,
if you saw that. So
I did see that. So to be clear, you're saying silver $100 by July and $200 by the end of 2026. That's your outlook for silver right now.
Mario Innecco warns a global sovereign debt crisis is coming, hitting Western nations hardest. He sees gold reaching $7,000 by end of 2026 and silver hitting $100 by July and $200 by end of 2026, driven by de-dollarization, central bank buying, and inflation being deliberate government policy rather than accident.
we're going to see a lot higher bond yields, and that gold and silver are not going to go down. That they're not higher interest rates or yields are not headwinds for the precious metals, mainly because we're in a bear market in bonds, and we have been since 2022. And if you look back at the early 60s to 1980, the 10-year yield went from below 4% to double digits, and gold went from 35 to almost 900.
Okay, now typically the thinking is, Mario, that higher yields are bearish for gold because people don't have a benefit. They don't make money by holding gold. They can put money in the treasury, which is deemed as safe, and get return on that money, on that investment, whereas holding gold does not produce yield. So why would this case be different? If we're going to have continuously higher yields, why is that counter to the typical idea that this is bad for gold?
Well, because if you have a bear market in bonds where the yields, the high end yields become higher and higher through time, it means that the bonds are losing, the principal is losing value. So if you buy a bond at 100, a 10-year treasury note at 100, and the yields keep going up for the next 5 years, your capital might become worth like 60 cents instead of 100 cents. So yes, you're going to get like a coupon, but it's not going to make up for the loss in the principal. Prior to 2020, like since the early 1980s, yields uh, were making lower lows and lower highs. So when yields went up, people knew that that was a kind of corrective move, and that eventually yields would go back down to help the economy. They would go up when there were price pressures, and then would go down, and bonds stayed very firm. And over time, of course, these yields became lower and lower, and that helped bond prices. And to me, the biggest signal that we're near an end of this bull market was in 2019, when we had about $17 trillion in negative yielding uh, bonds, which was something prior to that was something that was never even touched upon in academic books about bond investment or fixed income investment. And the only reason it happened was because central banks did so much QE that they drove the yields into negative territory. I was thinking earlier today, I think, and it might sound not very specific, but uh, I remember after the 2024 election, gold had gone up to 2,800 and then it dropped to 2,500 after the result. And a lot of people were worried. And here we are now at 4,500 almost, I think, near there. So 2,000, almost $2,000 higher. Um, but if I had to pick a number, I would say we could go as high as 7,000 by the end of this year. I wouldn't be surprised. And in 2 years' time, we could be, yeah, we could be even at 8, 10,000. I wouldn't be surprised.
7,000 gold by the end of this year. What takes us there? I mean, if we're not, what's the narrative? What drives us there? If we're Fed's not cutting rates, which it may not. Now the latest data is actually expecting well, there's about 40% chance, according to the CME Market Fed Watch tool, that they'll actually hike again. So what propels gold to 7,000 by the end of 2026?
Well, I look at that on a technical basis. I look at technical analysis as well. So I think it could be fairly easy to get there if we go through the old high at 5,600. And if you look at the bullion banks, even though I think the bullion banks, I've been following them for since 2002, and I always found that their forecasts were very conservative, and they always had to revise it higher, with the exception of Goldman Sachs, the, who see gold at 5,400 at the end of the year. Most of them see it around six and even higher than 6,000. So that's why I think 7,000 wouldn't be a stretch. But in terms of what might drive it there, it's difficult to say because a lot of people thought at the beginning of this war against Iran that gold would go to the moon because oil would go higher and it's a safe haven. And it hasn't really done that, even though we're still up on the year. Yeah, so here's the chart. And the reason why I see it going probably to near 100 by July is that we saw a low here on March 23rd, around 60. And ever since then, we've seen higher highs and higher lows. And the recent low here also hit this trend line that we had broken out of. It retested it and it's held. So if we make a new high in the next few weeks, I mean, and we go through 90, it's a very like it's not very far away from 100, and that's why I said I think we could go to 100. It's just it looks like we're now back on on, the trend is higher because we're making higher highs and higher lows. Of course, this is nothing is ever like in technical analysis can change, but it looks pretty good in my opinion.
And what do you think could be the fundamental or macro narrative that gets that to align with the technicals?
Yeah, I guess it would be like the some kind of like settlement in this Middle Eastern conflict.
Hmm.
Yeah, that would help silver because silver and gold have been like every time things get worse geopolitically with that war, uh, oil goes up and gold and silver get yeah, they get hit hard. So yeah, I would think it would be pointing to some kind of resolution.
Central banks and sovereigns in the Middle East are buying silver as a monetary asset. Correct me if I'm wrong, and if not, please elaborate on that.
Yeah, I mean, I've been hearing that since last year, like the second half of the year, that they've been buying not just silver but gold and physical. And if you think about it, the higher the price of silver goes, and I mean, we are at unprecedented prices going back, if you go back 45 years. If someone had uh, told you like a year ago that silver would go up above 100 and would be at 75, people would have questioned that because that 50 level had been such a big barrier. But the higher the price goes, the more interesting it becomes as a reserve asset, because it's more interesting to hold gold in the central bank vault if it's at 150 or $200 than it is at $20. So it's less bulky. And I think the other reason they're buying physical silver is because there's a there's a realization that countries need to safeguard uh, like real things, real raw materials uh, for developing new technologies, AI, and also for electrification, especially with what's going on in the Persian Gulf or with the Strait of Hormuz. Uh, I think like China has proven that they've rebalanced their energy like infrastructure quite well. They're doing a lot of let's say they're moving towards EV a lot in China, and they actually use thermal coal to power their electric power for the EVs. Of course, in the West, we're not doing that because we, especially here in the UK, we're into this climate change uh, thing that we can't use coal.
Well, that's a whole other conversation, amongst other things that are happening in the UK. Some other very, well, some policies that I certainly don't agree with. But again, that's a whole other conversation. But let's bring it back to silver. I get the idea of resource nationalism, and I get the idea of countries doing that and protecting those kind of assets. But I believe you said that it was being viewed as a monetary asset and hoarded on that level, according to the reports that you have. Can you expand on that a little bit? And if so, if that trend continues, is that one of the narratives that becomes so bullish for silver?
I think so, yeah. And it's both monetary and also for resource
Industrial.
nationalism. So, yeah. And I think also it's going to be a big part of the monetary system, if you want to call it, for China's really, they're the ones leading the BRICS. And they've been buying a lot of silver as well. I think in March they bought a record amount of silver. So I think this conflict in Iran is going to be akin to Britain's Suez Crisis, where after that, Britain really went downhill. The pound wasn't as important anymore. And like you said, it is going to accelerate a de dollarization. Uh, and the other thing is that countries will want now a neutral reserve asset, and that's what gold and even silver are to some extent.
Hmm.
So in 5 years' time, I see gold and silver being a lot more important, but also for countries, they're going to be dealing more in their own currencies, and especially still dollars, and also yuan and the euro, and maybe some other currencies. That's how I see it. So it's going to be a lot more decentralized. It's going to be a multipolar currency system with gold and silver as the major reserve assets, I would say, because why would you want to finance the US, or why would the US want to finance China by holding their treasuries, or vice versa with the EU? So yeah, that's how I see the world system. Well, it might not even be a system. It might be just like it just evolves like it did in the 19th century.
Elaborate on that.
Yeah, in the 19th century, we didn't have international organizations like the IMF, the World Bank, and countries just traded, and they settled their surpluses and deficits in gold. So
Hmm.
it wasn't really a system. It was just countries trading, And yeah, that's how I see it. Maybe the BRICS might try to like make it more of a system, but in a way, I think that's good. It's just a free market in money and trading, and yeah, and going back to real money. After all, it was J.P. Morgan who said that gold is money, everything else is credit.